All right, folks, I just want to give a little bit of context before this episode begins. This interview was actually filmed quite a bit ago. At the time, I was building another show called Unicorn Talks with my friend Ellum, and we would ask a little more high level questions. It wasn't centered around fundraising, but since Govind had built two different unicorns and he was also the ex CFO of WeWork India, I thought this episode was still valuable to publish. But I just want all of you to know. Normally, builders and funders interviews focus a lot more on tactical advice for building, growing, exiting, and fundraising for a startup. This has a few more high level questions, should I say, about, different aspects of building a startup, just about the Indian ecosystem, migration of talent, etc. So it's still a very interesting conversation. There's still a lot to learn from it. I just want to make sure you guys have a little bit of context. If you're wondering who the other co-host is, as I said, this was recorded in collaboration with my good friend Ellum. He's building his own channel now called The Modern Marco Polo, where he interviews fascinating people from all walks of life and gets their insights and stories. So if you're interested, check his channel out. He's doing a lot of great work. And yeah, hopefully you enjoy.
The first thing I always like to ask our guests is tell us a little about who you are and the coolest thing about you or your career, the coolest thing you've ever done.
My name is Govind. I'm the general partner at Paradigm Shift Capital. Paradigm Shift Capital is India's first truly global VC fund. Uh, I've had an extensive career of more than 2 decades at large IT companies and two unicorns, sort of been on both sides of my career, looking at, stable large companies building, growing profitable revenues, as well as being on very innovating, cutting edge innovation work on the startup side. Cool thing about me, probably something that I actually got to know a few months back rather, sorry, is I am the only general partner in the Indian VC ecosystem who have been influential and built two profitable unicorns. A lot of pride in that, in terms of how we went about it. But it takes a lot of work to actually get to that stature, and very happy and very proud to actually be contributing to the startup landscape here.
You mentioned profitable startup, which has become a bit of an oxymoron to hear those two words in the same sentence, profitable and unicorn. So I want to ask you a little about we've had so many guests from like all across the globe, like from Australia to, South Korea to Singapore to all the way to San Francisco. All the time, we love to ask them, what is the ecosystem in your specific region and country like? Now, India is really fascinating because it's got the most amount of people now. Its economy is one of the fastest growing in the world. It's got the density of unicorns is going up every day, and at some point Bangalore might beat San Francisco. We never know. I want to ask you, do you have any stats or like what do you generally think about the Indian ecosystem from the venture capitalists to the entrepreneurs? And then do you have any stats, anything interesting to share about it?
Sure. Before I sort of take a dab on that, but I think Bangalore is already called as Silicon Valley of India, so a lot of tech startups sort of bloom here. It's been that startup capital of the country, and I am based out of Bangalore, which is where probably most of the actions happen. So very lot of gratitude, to be honest, in terms of how Bangalore has been enabler in terms of setting up the whole startup space in the country. Um, Getting on to the VC landscape, I think this sort of goes uh, back to early 90s is when I sort of started understanding a lot more about entrepreneurship, what's really happening out there in US, and the first sprouts of, I would say, entrepreneurship, startup, or even anything with respect to technology-led startups in the country. I think we saw that happening with bunch of IIT graduates who actually set up Jungly in the late 90s. They were all Stanford mates, who went on to sort of build that. Uh, Ram Shriram was also part of that collaboration, who then went on to become the first board member at Google. Uh, But yeah, I mean, those were those, and since those days, I think we have come a very, very, very long way. It's been I would say the real maturity of Indian VC ecosystem, or even the startup landscape, which goes hand in hand, is give and take roughly about 15 years. Very different to what I would call in the Bay Area, in the Silicon Valley, is close to 40 years. So lot of learning that that has to happen, a lot of catch up that will happen. But India has been building on its own. And if I were to go a bit more dated, since those initial days, a very few of us may actually know that there was a pivotal moment in 2006 when there was this e-commerce startup called Bazi, which was acquired by eBay, and that sort of led to really the innovation fueling into the country. 2006 to 2010, 2011, I think we saw uh, Helion, IDG Ventures, Nexus Venture Partners, Axel, Sequoia, Ceph, Elevation, Lightspeed, all of them sort of, making a mark or making a debut in the country as a result of what they were able to see, in terms of what is going to come. Uh, Fortunately enough, that was also my intersection point at InMobi. I spent almost 5 years at InMobi. InMobi, for the unversed, is India's first ever unicorn. It happened to be, operating in the ad tech space, competing with Google and Facebook. Uh, Very fondly, and there are very few folks probably who could proudly talk about this. Is I sort of look at Indian startup ecosystem from back in those times, a decade old times, as InMobi, Ola, Paytm, and bunch of other companies are the pillars of what today's Indian startup ecosystem is actually all about. And that all of that started happening way back in 2010, 2011, which is when the initial sort of capital or the venture capital started coming into the country. Leaf Excel, very, very an unknown name back in the day in 2010, who actually headed Tiger, invested his first amount of check in Flipkart, which then at a later point in time went on to become the country's biggest exit when Walmart acquired Flipkart for almost $20 billion. So Leaf Excel has been then been considered. They did bunch of investments. They did about 38, 40 investments in the period of 2012 to 2015. A lot of iconic investments that they were able to actually make, which actually went on to do very, very well, or set the, I would say, foundational stone for Indian venture capital ecosystem. uh, Very interestingly, if you look at last decade, in like in perspective at a very, very macro level, uh, initially, a lot many more capital was consumed by startups which were building a very, very me too or a copy product from India. We actually used to call it as X for India. X for India would mean that, hey, are you actually building Uber for India, for example? Hey, are you building Amazon for India, for example? Hey, are you building Google for India? Are you building Groupon for India? So a lot of that work sort of happened in the past decade, which is where I think a lot of VCs deployed monies look thinking about the success in the West would actually be, something that they would be able to leverage upon, underwrite upon. But that sort of, was sort of, the face of, startup and the Indian venture capital ecosystem predominantly between 2011 to 2015. Wherein the consumer internet businesses, e-commerce businesses, verticalized e-commerce businesses, they sort of gained a very, very high momentum. Uh, Probably from 2016 onwards, I would say the shift moved towards a delivery. Something like a DoorDash equivalent in the India. There was Grofers, there was Big Basket, there's Zomato, Swiggy. All of these companies probably are decacons today. And the initial sprouts of these were visible only during 2016, 2017. So in 7 to 8 year time frame, with the kind of technology, that infrastructure that these guys built on, laid on the foundational stone for doing much more bigger things. And some of them have gone on to now list in the Indian stock exchanges, providing a handsome exit to some of the earlier investors. So that has been a very, very welcome move. But Underlying all of this, there was always a larger concern. And obviously, when 2016, there was obviously a global meltdown in terms of fundings being paused at a global level, which also impacted the Indian startup landscape, by the way. That is when I think, a lot many founders really started thinking much deeper beyond innovation. They realized that entrepreneurship is just not about disruption, just not about innovation, but to take a meaningful method of taking that disruption and innovation into large revenue generating businesses. And all of that wouldn't have been possible had the internet penetration not happened in the country, right? So I think, in my view, if you ask me, while we spoke a lot more about what happened in the last decade, fundamentally there were three big things that happened which really fueled the Indian startup ecosystem. The first was the disruption of telecom infrastructure by Geo Telecom, which is owned by Reliance. The second is UPI. I think everyone knows about UPI. It's the biggest financial infrastructure in the globe today. And the third is demonetization, where a lot more regulatory steps were taken to actually demonetize the existing currency to bring in the new currency. What happened as a result of that? A lot more, or the smartphone movement had already started happening in 2010 as a result of iPhone launch in the country. But coupled with, some of these big initiatives that were sort of done by the government, and also taken very welcomed by the startups. I think that sort of led the movement for digital India, right? Millions and millions of transactions started happening on smartphones. Something that we had already seen in China started happening in India at a very, very rapid pace in 2016-17. And that is where I think the upward curve, or the narrative for India being that, the third largest startup ecosystem in the globe, really started shaping up very, very well. Uh, since then, I think we have never looked backward. Uh, there have been, COVID pandemic crisis. There have been obviously many other rebounds which happened in 2021, 2022. But to make sure that, where we are currently, I think we have close to about uh, million startups already working on different type of innovations. This number probably was much smaller from the time sort of I have been looking at the startup landscape from back in 2015, 2016. uh, Obviously, a lot of all of these million startups have gone on to add significant amount of job opportunities since those times. It has attracted more than $75 billion of venture capital, something which is just, sort of behind US and China. And that's just, I still believe, fundamentally believe, that we are still scratching surface. A lot is going to happen. India is at that cusp where the digital infrastructure enabled with the country's demographic for population. 33% of our population are millennials, right? The median age of the country is 28. So you can imagine the potential talent that is going to get unlocked, and where we are set up as a country. So very, very high aspirations. The talent is there, the government regulatory infrastructure is there, and I think now there is a lot more capital to back all of that in terms of risk appetite, which sort of positions the country in the best form forward. You would have heard a lot many more people, but let me add this. I think we are at our golden period. Next 10 to 20 years are for Indian startup actually to go and make a mark at the global level.
And for because I guess you already mentioned $70 billion of VC funding. There's a lot of investors I meet, they want to invest in India. What would you say are some mistakes or misconceptions they might make when they're trying to invest in India?
Oh, this is very interesting, and thanks for asking that, Ellen. A lot of that happened back in 2013, 2014, when uh, everything that I spoke of in terms of talent opportunity, in terms of where the demographic is, in terms of how the internet disruption could have happened, actually didn't happen to the extent that we all thought it would be. The average value that the Indian customer would be really willing to pay for a fashion product or for a grocery product would still be a very, very low ACV or low revenue generating opportunity, right? And hence that led to a very, very high amount of burn. Still, because a lot many startups in the initial stages were looking at growth at any cost, burn at any cost, a lot more had to be, synthesized, a lot more had to be thought through in terms of building a very, very large business. And that is when I think corrective actions were taken. So it was a blessing in disguise in terms of just not sort of burn venture dollar for building a growth story. It became a calibrated version as a result of what was seen, that hey, you can't really just take a product from US and copy it in India and build it in India. You will have to actually start structuring it from based on what the Indian consumer is looking for. What are their taste and behaviors? What is the pattern that you are seeing from that perspective? And then how do you actually build a business around that? So I think those were like initial set of mistakes, which by the way, I think it's not new to India. I have seen a similar pattern in both US and China where a lot of initial venture dollars were sort of, burnt in terms of just understanding and extracting the profile. Something that we are actually, this could be a very ironical statement to make right now, that a lot of money would be put in AI, but how many of them, how many of those AI companies will actually go on to build billion-dollar ventures, right? So it is classical for any VC or a startup landscape to take those experimentative dollars, as I call it as experimentative, because the infrastructure is not built. You still do not know what the taste and patterns would come across. You still do not know what the large business models will be built upon, but you still need to do that to actually get to that point. And the ones who get to that are the founders who have a lot of hunger, who endure into building something very, very big. And those are the kind of founders that we are always look after for.
Absolutely. When you look at the numbers, I think the Indian diaspora in the United States is the second highest earning group right after the Jewish diaspora. It's a very interesting
Yep.
stat because a lot of the major tech CEOs in the US now are also they come from an Indian origin. There's been a massive brain drain where a lot of talent, you graduates from top Indian colleges or decides to come to the US for college and they move here and they take up jobs here and they build a life for themselves here. Where do you see that brain drain going? Do you think with the current infrastructure and environment, India is going to be able to retain this talent and, in fact, even maybe re-attract some of the people in this diaspora in the United States back to its home country where they're going to say, oh,
Yeah.
now it's the perfect time to go back home and build something global. What do you think about the future of this kind of movement of talent?
You're absolutely right up there, Burke, because just in terms of numbers, I think there have been more than 5 million Indian Americans who, obviously constitute a very, very large percentage of the US population in itself. Probably just the largest group after Chinese Americans, I would say, and that's a very big number which has been growing very, very steadily. I think every year there are about 200,000 students who are looking up for graduation in US after in from India. So uh, look, software exports from India has never been a new thing, right? Back from 90s, there have been companies like Infosys, Wipro, Cognizant, TCS that have been doing this and has actually have been able to actually set up very, very large businesses here in India with delivery centers based out of India, but serving for clients in America and Europe. And that is obviously going to be possible only once we are continue to able to build that talent pool and continue to sort of ship that export that talent back into that country. That being said, I think what we are seeing now, particularly in the last 5 to 7 years, the aspiration of a IIT graduate or an IIM graduate, which are some of the bigger institutes, educational institutes here in India, they have been doing pretty well, and the aspirations for some of these graduates are now just not to sort of move to US or land a job in US, but to build something in India. And how did that happen is obviously a story of how the VC or the startup landscape have been maturing. Now, if you talk in absolute numbers or volume of numbers, obviously there will be a continuous high number of students, high number of professionals who will continue to seek out jobs. But just in terms of percentage, I believe there is a corrective course action or a course action that has happened. I don't know if it is corrective or not, but where a lot many more folks from India, students from India, professionals from India are willing to actually take that entrepreneurial bet, have that risk aspirations, build in something that they really want to that they really believe in, and thereby actually create something of value for customers or consumers here. So uh, in terms of pure sheer volume, I think we will continue to see the export of talent happening from India for a global market. And as you rightly said, uh, there are many large iconic American companies where the CEOs are actually from the Indian roots. But we will continue to see the emergence of the ambitional layer of entrepreneurial talent in India, where we will see a lot many more companies being built. As I said previously, right? We are just scratching surface in terms of where we are. Even though we are already the third largest startup ecosystem in the world, I think we are still we are just at very nascent stages, just getting to scratch those. I think whatever whatever was built in the past 15 years is really reaping dividend today. It's not that the country or something has changed dramatically. I think a lot of building blocks were done, a lot of layers were built rightly, a lot of foundational stones were set up for that to happen. And thereby, that's why I say there's the golden period for Indian startup ecosystem, because from here on we see a lot many more value being driven by innovation, fueling innovation, lot of cutting edge work happening in the country.
And one of the things you mentioned when you're growing, these large companies, and from your own journey of, helping build 2 unicorns, you say one of the most important things on your blog post was a profitable, healthy EBITDA. And what would you say? How would you recommend startups to continue having a healthy EBITDA throughout its early to its larger scales?
Great question, Ellen. I think it's very important to understand as a founder or as an entrepreneur, what really are you building? And once you have got that idea of what really you want to build and how you want to go about it, it's supremely important to understand whether it is a venture scalable product or not. I think that is the most important critical aspect that I have always been talking to entrepreneurs. There is obviously a lot more energy, passion, and the enigma to actually solve that problem. There are large white spaces that are still available in the country to go and solve for. Uh, just attracting venture dollar or sort of raising money from VC is not the objective that entrepreneurs should look for. That is one of the objectives. You still need to go and hire your team. You still need to go and crack your early customers. You still need to build a quality product. So capital is just an underlying enabler. It's not the end of the means, it's one of the means. So that is supremely important to understand. And that is where I sort of come in with my experience from the past 2 decades or so, in terms of really deciphering in terms of whether it is a venture scalable product or not. That's the first important thing to understand from a VC's perspective, whether it is being funded by us or by any other fellow VC. Once that is set up is when you need to know what your product journey would look like. If you are building something on the consumer internet space, then you need to know that a high volume attracts that kind of love for the product, and the continuity or the retention of that is far more important in the first year or two of the product. If you are building something in B2B space, obviously it will take a slightly longer time because the sales cycles are slightly longer, the proof of concepts take a slightly longer. So the VCs or the founders need to understand that there is a bit of a jet lag or time adjustment that you need to do based on which founder is building what product. If you are building deep tech and you are building something which is very IP driven innovation, right? Something which is very Silicon Valley style, you will build that for at least a 3 to 4 years before even you see the first signs of revenue. So I think just sort of having that very grounded understanding of what really are you solving for and which persona of customers are you attracting as a result of building that product, that is important before you even get to revenues, EBITDA, and healthy EBITDA, etc. The very important fact is once you have done that, you should not waste any time to actually go and achieve that. That is supremely important. That is where the speed, velocity, and the ability to actually go and do that execution muscle mass is super important. I always say this very fondly, that in an early stage startup, the first 20 to 25 founding team members make or break the company. It's as simple as that. If you have got very high quality talent engineers who are actually building your engineering team, very high quality product teams who are shipping your products, chances are you'll actually survive any sort of pandemic or any other black swan event or any other silo in the global funding, etc. If you do not have that, there are many more reasons to worry even if you have raised a large round. Just raising a large round is not a measure of success in my view. How you are able to sort of attract that capital, build an understanding of what your customers are looking for, and then build a very, I would say, scalable product defines where you need to put in these financial metrics into place.
There's a lot to unpack in your answer there, but I want to specifically ask you about one of your earlier answers. You mentioned a lot of acquisitions that happened within, a lot of American large enterprises coming in and buying up Indian startups. In terms of liquidity, I know you mentioned a lot of startups listing on the Indian Stock Exchange, and obviously that's one way of achieving liquidity. But a lot of startups, they also like to go for an acquisition, some kind of M&A deal. Do you think a lot of the M&A activity in the ecosystem today is driven by larger US companies coming up and buying in smaller Indian startups, or do you see a lot of, like what's the gentleman's name, the richest man in India? Can't Tata
Mukesh
Motors.
Ambani.
Yeah, Ambani. Like, do you see like Ambani's corporations that these types of massive Indian enterprises buying up Indian startups, or do you see more of U.S. companies coming in and doing that? Where do you kind of see that M&A activity?
Great question, Burke. I think this is one of those things where one size does not fit all. Very simple. So if you simply sort of bifurcate the demography of the startups, I would say a lot of consumer startups are actually having very heightened M&A activity with domestic capital, domestic group of companies. Because what they have been able to see, you spoke about Reliance, which is Mukesh Ambani, you talk about Tata's, which is one of the oldest businesses in the country, and then there are many more consumer startups. What the goodness that they bring is the whole distributor, right? A lot of startups build really great products at the consumer cusp, and there is that initial love, and there is that retention, but they really do not know how to actually crack the distribution model or the GTM model. A lot of these, legacy legendary companies have been able to help them crack that distribution model, and thereby, sort of take that forward. So if we sort of take that in strides only with consumer internet startups, then I see a lot of heightened M&A activity happening domestically. If you look at more technology driven startups or more sort of IP driven startups, I've been seeing a lot of activity happening between US India as a corridor, right? And why that it's supremely important to understand why, because if you have built if as a startup founder I have built a product which is actually solving a very niche problem for a large corporation in US, and they go about evaluating that proposal from a build versus buy model, that hey, if I were to build something similar, what do I need to pay for, versus whether I actually go and buy someone who's been able to already do that and solve that problem, and then I all I need to do care for is just the integration of the product. That's supremely important to understand, and we see a lot of that happening, right? So when we started the fund, when we looked at India US as a cross border corridor, we knew that some of our portfolio companies would be a very right pick for some of the large US enterprise companies already, and that has been proven to be true when a lot of our portfolio companies have already gotten M&A offers. It's just that the founders will have to ultimately know whether they want to make it big or they want to actually take an exit.
I guess going back, it was interesting because you mentioned how you were building two unicorns, and WeWork India. It was actually, I was researching, it was a completely independent entity from WeWork. And you've been a CFO and you helped the sales and marketing and all those roles. What would you say, if to the extent where you can talk about it, you played differently in India, WeWork India, than the larger WeWork and some of the failures that WeWork has kind of faced globally?
Oh, that will require a hell lot of separate podcast on its own, because there are so many learnings that we have had. But I'm glad that you brought this up, and you're absolutely right that WeWork India sort of ran independently. It's actually owned by one of the largest real estate developers in southern India, which is called Embassy. Uh, and the way we sort of operated was fairly independent. I think the two very large reasons I would attribute to, beyond several number of reasons that actually goes wrong or right for any startup to be built in any market, is uh, WeWork in India had the real estate prowess. It really understood where the customer is looking for what kind of solution and what kind of inventory or what kind of real estate that they should go after. It was not about, hey, let's just go and make every other space a co-working space, right? You need to understand whether you'll be able to build a space which tastes to the suit, which tastes probably the Indian consumer better. And that was probably one of the biggest reasons I would attribute in terms of going about that. And the second, I think I always attribute that to the team. Today, the entire WeWork India team is probably more than 5 years. They have been there, they have been together, they have been close knit. All the senior folks have been around for a very very long time and have been very 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 instrumental in helping the team grow and then achieve higher scales. So uh, I think these are very very important things that sometimes I think that these may sound very obvious, but very very as the saying goes, the boring things actually does the magic. So uh, I would say that some of these important aspects of just knowing how to run the business efficiently in this side of the country, and also having the independence and accountability to actually lead it the way we wanted it to lead, I think that helped us a lot. It's coincidental that I think we work in the global shoots actually then saw how India has been actually beautifully set up and started doing a lot many more agreements that they had done with a similarish sort of how they had done with WeWork in India. They started looking at replicating that model in some of the other countries as well.
You mentioned being based in Bangalore right now. I want to ask you, what do you think about Bangalore makes it so attractive to everyone who wants to build a startup? Because, like, I was surprised because every time I meet someone who's in startups in India, they're not in Delhi, they're not in Mumbai, they're in, Bangalore. What about its history and what about the way it's set up, whether it's, maybe business friendly government policies or maybe it's just kind of like San Francisco, a lot of it was because military was funding a lot of research and it's got a history. What kind of history does Bangalore have that makes it the startup hub of India?
I think on the funny side, it's also called the beer capital of the country. That's on the lighter side, and obviously a lot of bonding happens on beer. So, uh, anyway, I think on a serious note, what did happen in the early 90s was a lot of IT services companies started stemming up from Bangalore. A lot of engineering talent was actually blossoming in the country from Bangalore. I think that just set up the right pathway for product worlds to actually start from. So when I actually had my experience of building Indian services units which were shipping to US clients, very clearly I was very I mean, as for the very matter of the fact, I was aware that it's matter of time when tech products will also be built from this country to be exported into the US countries or into the offshore countries. So uh, I think just sort of building that base layer of taking the city from where it was to where it is today, that fundamentally helped. And obviously, and it's now a good or a welcome note that a lot of other cities are catching up. We see a lot of heightened startup activity happening in Delhi, Bombay, Hyderabad, Pune. But obviously, Bangalore is on top of the charts and continues to sort of attract a lot of talent, both on engineering aspect, networking, beer, as well as, the climate that it offers.
I guess this is a question we ask all our guests is so we're both young founders. We're trying to make it and trying to build large unicorn startups. The podcast called Unicorn Talks. What would be your advice for young founders out there generally, and then also maybe specifically founders who are listening currently in India who are very young?
And maybe even us. You could personalize it to us as well.
Right. Okay. Uh, no, I think, see, I've had a very, a learning which I've actually learned from sports. And I draw a lot of parallels between how you actually, endure for sports and athletes. And I'm glad that, Elim, you have been an MMA champion. You have been always looking up to that.
I've I've not been a champion. I'm not a champion.
I have been playing badminton and tennis myself, so I have been following the sports arena very very quickly, and it is you know it astonishes me that there are so many similarities between an athlete and a founder. and an entrepreneur.
Mm.
Very simple. The reason for those are very, very simple. You got to have a very, very long-term mindset. There could be some small victories, there could be, small failures, but at the end of the day, if you know where your destination is, if you know that, hey, this is something that you really want to achieve, things are going to come across and make sure that they happen if your heart and soul is there to actually achieve that. If it is more about, hey, I am just doing it for time being, I probably do not have my heart, mind and soul fully invested in this. The game teaches you that, hey, unless you are not there in it for yourself, there is no way the entire ecosystem is going to help you. So I think that is the first similarity or a parallel that I draw from sports background to how you actually can get into startups. It's not for It's far less for fun. I think we have all heard Elon Musk talking about, what is actually building the startups, and obviously, building the multiple ones that he did. Uh, but it looks very, glamorous from the outset. For a founder who is there seriously building something, really wish to solve that problem, that hunger and passion is the only thing that will take you distance. There is nothing else that can take you that longer distance. Because guess what, a lot of founders, when I speak to them, and you obviously start from your early days, and then you go on to raise your series A, series B, you get to your growth models. There's already 7 or 8 years that you have spent to actually get to growth engine, and then you get to pre-IPO stages, or listing days, and you're talking about any time horizon of 10 to 15 years. That's a very long time period commitment that you need to have. But guess what, IPO is not the end of the destination. IPO is the start of the destination. So as a founder, you need to be super clear that if you are invested in this for next 20, 30, 40 years, putting in that much of time and effort, really wish to solve that problem. It doesn't matter whether the world agrees with you or not. It doesn't matter whether the world echoes with you or not. Right? The classical case, the most recent case that we have always heard about is Nvidia, right? The guy kept on building it irrespective of whatever was spoken about in terms of how Intel and AMDs are giants in these spaces and Nvidia is not going to grow. Ultimately, that endurance and that hunger and the passion is what is going to take you distances. And that is exactly the same for a sportsman or a sports person or an athlete. That, hey, these are the things, these are the qualities that we look for. Personally, or even at a fund level, when we sort of talk to founders, the first conversation is never about what are you building, what is the deck, go through your deck, and what are the key milestones, what are the key financial parameters. The first question is always about, hey, why are you building what you're building? What led you to build this? What made you think that, hey, I actually want to solve for this? Because guess what, I mean, the times are always going to be testing. There will be always bumpy roads in the entire journey. What is going to take you places is only how tough you are to swallow that, how tough you are to take feedbacks, how critically you can actually accept it and still go on to build every other day, right? Very, very important to keep that in mind. And I mean, this is far more individual persona driven than someone like me who's talking about this on this show. It has to come from you. It cannot be infused by me into you, right? So it's very important that you actually think very deeply about what you want to build and solve for. If that is a venture scalable product, make sure that you are able to raise capital to make sure that you go on to then scale the product, go on to growth stages, and then continue to solve customers' problem. That obsession for solving customers' problem is the only thing that will take you places. There is nothing else that can replace that.
I think we might all be ready to run through a brick wall after that speech. That was absolutely amazing. Elon Musk says, building a company is kind of like eating glass and staring at the
Getting
abyss.
nothing.
So,
Yep.
one last question. I know we're nearing or probably have passed the 40-minute mark. So I know if you're listening, hopefully you're getting value. But the last question I want to ask you is, you talked about founder motivation. So you ask the founders you speak to, why are you building this? What is it that, connects you to this? One investor I talked to recently, he said something very interesting. He said, you either build a company because you personally have some kind of vendetta against the world and you just want to prove something and you want to do something that's like personal to you, or you're kind of just dead inside, you want to make a lot of money and you don't really care what it is. In terms of when it comes to building startups, do you think it's possible for someone to just be like, look, I'm not really passionate about anything. I don't really care. I just want to build something massive and then just like choose something where they think there's an opportunity? Or do you think the kind of motivation that lasts is that personal thing? Where do you kind of see the play, and do you think both work, or what do you think?
Very interesting. And, again, I have probably slightly more controversial response to this is, it again depends on what your objective is. And the reason I say that objective word very carefully is, uh, it, are you having a short-term horizon or a long-term horizon? As simple as that. Are you looking to build something in the space for next 20, 30, 40 years, or are you actually looking at for only next 8 to 10 years? Are you looking at only wealth creation, or are you looking for purpose? Right? A lot of these actually go on to define how you actually dabble into entrepreneurship. It's not necessary that entrepreneurship is always equivalent to raising venture capital dollars. By the That's a myth. Only because you have raised venture capital dollars are you termed as entrepreneur? Absolutely not. There are so many amazing bootstrap founders that I know of. They have been able to go on build large businesses just with the tenacity, the perseverance that they had. So its first myth is not to sort of really get into, hey, if only if I am able to raise venture money from a VC fund is when I would be considered an entrepreneur or a successful one. uh, let's get back to where I started from. Objective is supremely important. So if you are a very smart businessman, business person, I would say, and not really an entrepreneur, to be honest, what you're looking for is what you spoke of, Burke, as the primary thing, right? So that's the first corridor. That if you have a very smart tactical business brain, you see an interesting gap in a certain industry, certain market, you're looking at devoting 5 to 7, 10 years in that. You know that you'll be able to create an elephant in that particular space, but ultimately you're objectively looking at someone to buy you out. Then you're only looking at a business transaction. You're not looking at entrepreneurship. That is where I differentiate between entrepreneurship and just being a business professional or a business person. An entrepreneur, in my view, will always have a very deep purpose. It could be a personal vendetta. I rarely meet founders who are driven just purely by wealth making engine. I think wealth making engine is a byproduct of building something very, very large. It cannot be your first objective. If that is the first objective, then you are better off doing many, many other things, because guess what, one of my portfolio founders actually told me this very initially in his journey, that building a startup has to be the most idiotic financial decision, right? It's as simple as that, because you do not know when you will actually be able to create that wealth. You never know when that pivotal moment is going to come. You never know when is that hockey stick going to actually come into your access charts. So when you actually start on day zero, you have no idea, no freaking idea of when that is going to happen. So it has to be the most financially irresponsible decision to have. So it cannot be for wealth making. It obviously is a byproduct. Obviously, you're not doing it for the sake of doing it. It's not only just for pure, impact, but a very deep purpose to build what you're building is going to go a very long way. We started Paradigm Shift Capital with the same ethos. It is no different to how a founder or an entrepreneur would think like. We saw the Indian startup VC ecosystem. We saw the large white space lying out there in terms of, hey, I know that a lot of Indian founders are now aspirationally looking to build global products, and shipping into global markets. There's no VC fund who is exclusively looking at that opportunity. It is the best opportunity that we can do. This decade is the best time to actually go and put venture dollars on that thesis. And guess what? There is no better GP thesis fit fund that could actually do that. Three of us come only from that background. We have only built global companies. We have only built global brands. So, if our purpose was so very clear, the vision was so very clear, it automatically, turned into, doing what we do today. And therefore, I think a lot of founders sort of associate very closely with us. They understand the deeper purpose for why we are here. We chose pre-seed as a stage because we wanted to work with founders. A lot of our portfolio founders call us as co-founder investors. I think that's a phenomenal thing to actually being spoken about in your first fund. I have never heard of any first fund manager being spoken in that light. The reason we go that daring, we take that risk is because I think it's that asset class which embraces risk. But at the same point in time, we have built three unicorns between the three of us. We want to bring back that, we want to give it back to the ecosystem, we want to share our learnings, and therefore we think we'll be better off working with the founders rather than just sort of deploying larger checks at the growth stages. So there is a lot of purpose, a lot of clear understanding, clear vision in terms of why we do what we do. And hence, that is very, very important if you are thinking of starting up as a founder as well. Your purpose has to be very, very clear.
Absolutely. I know I said that was the last question, but I got one more because you mentioned profitable startups, which in the US and in many other countries is now an oxymoron because they just don't go together. I want to ask you, when it comes to startups, it's very easy. Like a lot of startups just burn money. What was it about these specific profitable startups that you observed in their practices and how they ran the companies that allowed them to get to a multi-billion-dollar status, not like over $1 billion, and still be able to maintain that profitability, maintain that, and not just like burn, like throw money into the furnace and watch it burn.
I think it all goes back to building basic blocks. It is all about fundamental tenets of actually building a credible business. A lot of these founders that I have worked with, I have personally directly with them, and even a lot many more that I actually have lend my inputs into. I see a very differentiated approach in terms of how they want to go and build a large business, which is backed as a venture capital funded business. It's just not about, hey, big, surely because I've been able to raise venture capital, that gives me a license or an authority to actually go and burn that in terms of developing a product. I mean, sure enough, if you wish to do that and your investor is aligned and you want to do that, you have been able to sort of get to that path. If you have a very clear understanding that, hey, I'll do this for this time period and see what the results are going to be after some point of time, absolutely go and do that. Have your stakeholders aligned, be very clear why you're doing what you're doing. But there are many more out there who are very clear in terms of, hey, this is what my customer is looking for. This is a clear pain point that I can solve for. And if I am able to do that initially in a way that my product solves for that, and it can become scalable because obviously internet is democratized now, then why not build a very large business which by default and as a virtue of the design that they have created is revenue generating and profitable. So very important key thing to for the folks who are listening and for both of you is, it's not that an entrepreneur or founder from day zero wants to build a profitable business because they have to have profitability in it. I think it is important to know that your unit economics should be in place the moment you are looking for that hockey stick kind of a growth, or you are at that inflection point of that kind of a growth. Because if that is not the case, then you are just sort of buying users or buying that revenue, which isn't a very purpose driven business for a founder. It has to be driven by the fact that, hey, underlying this is the customer pain point I'm solving for. And a virtue of that, as a result of the scale, I'm able to actually build, you know, profitability into the company that obviously maximizes stakeholder values, that obviously maximizes the sort of horizon that you can do in terms of what the exits for all your initial supporters have been. All of that goes hand in hand. So it's not that you have to start that from day one in your mindset, but you have to be very clear that, hey, once the time arrives, then you should not be lagging behind.
Absolutely. Well, thank you so much for your time.